Happy Monday, traders. Well, we are starting a fresh week in markets with a lot of very interesting moves. So let's start off with the currency space, which has been heavily influenced by intervention. So on Thursday, post the FOMC, dollar yen was pushing new 40-year highs up around 164. And we finally found the new line in the sand for the Japanese, and that was it. So they came in and intervened heavily at around that 164 level. And smashed dollar yen down almost 600 points on Thursday, down towards 158. Before dollar yen started retracing, and Friday we saw it back above 160, up towards 160.80 before we saw fresh intervention, but this time on Friday we saw intervention by the US on behalf of the Japanese. So look, that is a very important key takeaway. Because it's the first time in 30 years that the US has jointly intervened with the Japanese yen. So when the US intervened, they got dollar yen then down towards 157 before we closed around 157.50 on Friday. Now, technically, we talked about this on Friday, that it was the last trading day of the month of July. And on the monthly charts, dollar yen had printed a huge bearish outside range month. If dollar yen closed on Friday at the end of the month, below the low of the previous month, which was 159.20, then we would have what's called a bearish key reversal month. We closed at 157.50, so well below the low of the previous month. And yes, we've confirmed technically that dollar yen has a big bearish key reversal month, which is a top indicator. So look, you can say with a lot of confidence at the moment, so on the techs, but also with this joint intervention with the US, that we have seen a meaningful high for dollar yen, and I'd say for some time to come. So any levels going up towards 160, no doubt, traders are going to be lining up, trying to sell dollar yen. We've also heard from both the Ministry of Finance in Japan and Scott Bessent, who's the US Treasury Secretary, that they would not hesitate to jointly intervene in the currency market again. So look, it's very hard to fight the US and Japan when they are jointly intervening. So let's see how low they can get dollar yen, but at the moment, again, they have been very, very successful. And so look, this intervention has triggered broad-based US dollar weakness across the board, with obviously DXY smashed below 100 again. So well away now from those two-year highs that we've made recently. And I'd suggest while the yen continues to strengthen, that we would continue to see that broad-based US dollar weakness. So now, moving on, this weekend we saw some headlines from Trump where he called off the strikes on Iran, and specifically he was going to target Iranian energy infrastructure because he said that he was asked by Iran and the Gulf states because they had apparently the parameters of a deal on the table. So markets have opened, obviously, on the open today here on Monday, trading on the back of those headlines. So we've seen crude oil, which was trading at $86 on Friday on the close. Market was very scared, obviously, what would happen if energy infrastructure was hit. Be smashed lower below $80, and a good 8% plus lower gapping on the open. But having said all of this, the Iranians have come out and said that they did not ask Trump to stop the strikes. And they've also had headlines out this morning as well that Iran has fired on tankers going through the Strait of Hormuz. So look, it is very hard to understand exactly what's going on here, who's telling the truth. And so market obviously is a little bit confused, but they're giving Trump the benefit of the doubt again. I'm not sure how long the market will continue to do that. But in any case, we've got crude, which is bouncing around, super volatile, around that $80 mark at the moment. But I would suggest, because of this confusion, I would not be chasing crude fresh short down towards these sort of levels. But moving on, obviously that has triggered risk on trading to start the week. We do have US equities at the moment. S&P and Nasdaq both gapped up from Friday's close, so they're up about 0.5%. Not really running away aggressively, but yes, obviously positive. Gold at the moment, it's trading around 40.70. We've talked about this numerous times, but look, it's still in that extended range. 4,000 up to 4,200, so we're sort of sitting around that mid-range. But again, that 4,000 support has been great support for gold so far. And obviously this news at the moment, if the market continues to trade risk on, should continue to be positive for gold. So we shouldn't see any sort of selling hit that early on in trading for the week. And finally, just in other news, Bitcoin had some negative headlines over the weekend. Hackers stole $80 million worth of Bitcoin from basically Cold Wallet. So this is Bitcoin holders that are using self-custody, so have taken their Bitcoin off exchange. And so their Bitcoin also is stored off the net. So this is really a big negative news for Bitcoin in that, Bitcoin holders who have tried to do the right thing and use self-custody and extra security have actually had their Bitcoin stolen. So yes, Bitcoin did trade down towards the key supports around 62,000. And other negative news that Saylor apparently is green lighting for Strategy, his fund, to sell up towards 5 billion Bitcoin. So Bitcoin has now rallied a little bit back up towards 63,500, just on the back of positive headlines from Iran and obviously this huge sell-off in crude and risk trading positively. But no doubt there's going to be it's going to be hard work topside for Bitcoin. I'd imagine very hard to get back up towards that 65 plus. So bias is maybe selling rallies if on the back of this risk rally. But in any case, look, all eyes are obviously on crude oil. Headlines coming from the Middle East and whether or not Trump's positivity and the fact that he's saying that these deals are on the table and pretty much the parameters of them have been agreed to, confirmed by Iran. Because at the moment we're not getting that. So look, starting the week, some volatility, but risk on trading. All right, good luck with your trades. We'll check back in with you shortly.